Mayuresh Joshi of Angel Broking is also with us. Mayuresh, your thoughts on the numbers, and given that once again, third quarter in a row, Maruti is beating street estimates on margins, how much of an upside would you expect to see on the stock from these elevated levels?
Afternoon, Sonia. I think clearly more or less in line with what we were estimating. The profits that we were estimating were close to 1248 odd crores. So I think very much in line on that front. On the top line, we were expecting a 14% growth. The top line growth has been 13%. So again, I think the numbers more or less in line with estimates. We were estimating EBITDA margins around 16.2, a marginal beat on that one. So yes, I think the operational efficiencies specifically on the EBITDA front is playing out for Maruti. I think it's coupled with fall in commodity prices, the volume growth, and that operating leverage benefits clearly working out on the stock. So clearly I think the product mix is something that we'll ideally like to watch out for. The management commentary on the capex in the Gujarat plant is something we'd ideally like to see, and again the management commentary on whether these EBITDA margins are sustainable. Having said that, I think our positive outlook on the stock continues. We still believe Maruti can outgrow the four-wheeler industry. I think 33% is the only contribution that comes from rural India, and again a significant portion comes from urban and semi-urban areas, which will drive going forward as well. So yes, I think an accumulative rating on the stock still continues with a target of 4960, but post management commentary I think we might even revise our numbers if the management commentary appears very strong and robust.
Okay, just some more numbers coming in. The realizations for the company have improved a tad bit quarter on quarter. So now this quarter they've realized 3.94 lakh rupees per unit compared to 3.93 lakh rupees per unit last quarter. So there's a little bit of a improvement in realizations, and yes, the margins too have come in at 16.3%. It's a pure operational beat this time around, and that's the reason the stock as well is up almost about 1%. Priya Ranjan of Systematics, who also tracks this stock closely, joins in now. Priya, your thoughts on the numbers, and how much of an upside would you expect to see on the stock from here on?
I think the operational numbers are mostly in line, and the margin etc. is probably are mostly in line. So what we would like to see going ahead will how the Baleno fares in the market and how overall volume ramp-ups happen. So these are the key metrics we would like to watch out for in the near term. I mean, maybe next 3 to 6 months. So that will be the direction where we can see the stocks heading. If the Baleno is pretty successful, then definitely we can see a decent upside from the stocks and all.
Okay, guys, just one final question from your end before we let you go. Given that these numbers are in line with estimates but a strong set of numbers, what kind of a upside would you expect to see on the stock? Because from here on there are many triggers lined up, the new launches. There's an expectation that the yen will continue to be favorable or depreciate, aiding Maruti going ahead. Given all of that, do you think this 16.3% margin is sustainable for the second half of the year, and what would your recommendation be on the stock?
Yeah, Sonia, I think the margins are pretty sustainable considering that commodity prices have not bounced back and are not expected to surge substantially going ahead. Plus, there is a big volume ramp up with festive season and the company having launched new models. So the volume growth should continue and should be industry beating. So in that sense, benefits of operating leverage, as you rightly mentioned, the currency should also be beneficial. So these margins are definitely sustainable. Plus, like if we start building in Baleno models, volumes, all those, and all the new models are higher price realizations compared to its existing product base. So in that sense, the revenue growth and the margins and the absolute growth in profit should be much faster going ahead. In that sense, I think so. We'll revise our estimate post the management commentary. Last rating was a buy with a 4,850 target. We'll revise that post management conference call.
All right, Prayesh, thanks for that. Well, just one more number that we've calculated is the gross margins, which have improved for Maruti to 33.1% this quarter versus 32.6% last quarter. So Anuj also joins me now into the studio. Anuj, looks like a good set of numbers for Maruti, in line with estimates, but a solid set of numbers coming in.
Yeah, and I think that's the reason, Sonia, the stock is still up about 1% because it's not a beat, but it's in line. But again, year on year the numbers are good, and as you pointed out, out, it's got good things going for it. The future looks quite okay for Maruti. You have the Baleno launch that I think is quite favorable, and I think as we discussed, as we've been discussing, the yen looks like it's going towards 125, 126. In fact, this morning you saw again further depreciation, and you've seen this correlation between the Japanese market and Maruti Suzuki stock.
Also, one more thing I would like to just point out, these gross margin improvement is important because the benefits of lower raw material costs, we thought that they've flown through completely this quarter, but Maruti works with a lag effect with some vendors. So, the benefit of that has come through now in this quarter as well with a lag effect. That's the reason gross margins have improved quarter on quarter, realizations have gone up quarter on quarter, and the margins too at 16.3.
Oh, clearly, but that's Maruti. Let's talk about the market, and there are 2 or 3 points which clearly stand out at this point in time. We've discussed Maruti, but apart from that, it's been an earnings heavy day. Lupin clearly was the shocker of the day, and that's been the reason that the market has sulked again in the second half. In the first half, of course, the market was down because of HDFC. Now the market is sulking because of what's happened with Lupin, and that clearly is the reason that you're seeing the bit of decline in the index. And in fact, if you pull out some more stocks, for the Nifty, it's of course 8200, which is now seen as a bit of a floor. 8300 is seen as a bit of a resistance. So traders believe that this range of 8200 to 8300 is going to continue. The mid-cap action today has been better than the Nifty, and in the mid-cap space, really 2 stocks that stand out. One is Dish TV, which is clearly in line with the estimates, but really the big star of the day is TVS Motor with the kind of performance that we have seen. Our guests also join in to take us through the last hour of trade. We have Parag Thakkar and Mr. S.P. Tulsian joining us in a bit. Manas Jaiswal, C.K. Narayan and Jivesh Shah will also join in. Good afternoon, gentlemen.